Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is January 29th, 2025, and we're diving into Xerox's fourth quarter and full year 2024 earnings report. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Xerox has had quite a year with significant strategic shifts and financial challenges. I'm looking forward to breaking down the numbers and what they mean for the company's future.
Revenue and profitability overview. Let's start with the top line. Xerox reported a revenue of $1.61 billion for Q4 2024, which is an 8.6% decrease from the previous year. John, can you elaborate on the factors contributing to this decline?
Certainly. The decline in revenue is primarily due to lower equipment sales and a reduction in managed print service revenue. The company is undergoing a strategic shift, which includes geographic simplification and exiting certain non-strategic businesses. These actions, while impacting short-term revenue, are part of Xerox's long-term reinvention strategy.
Despite the revenue drop, Xerox's adjusted EPS for Q4 was 36. How did they manage to maintain profitability?
That's a great point. Xerox improved its adjusted operating margin to 6.4%, up 100 basis points year over year. This was achieved through cost-cutting measures and operational efficiencies, which helped offset the revenue decline.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of 52 cents for Xerox, but the actual adjusted EPS came in at 36 cents. What does this miss indicate, John?
The miss on EPS suggests that while Xerox is making strides in operational efficiency, the revenue challenges are more significant than anticipated. The company's strategic shifts are still in the early stages, and it will take time for these changes to translate into financial performance that meets or exceeds market expectations.
How should investors interpret this EPS miss in the context of Xerox's long-term strategy?
Investors should view this as a transitional phase. Xerox is focusing on its reinvention strategy, which includes acquisitions like IT Savvy and the pending Lexmark deal. These moves are expected to bolster their core operations and drive future growth, but patience will be key.
Strategic initiatives and future outlook. John, Xerox has been vocal about its reinvention strategy. Can you tell us more about their strategic initiatives and what we can expect in 2025?
Xerox is focusing on transforming its business model to ensure long-term growth. This includes the acquisition of IT Savvy and the pending acquisition of Lexmark, which are expected to enhance their core operations. For 2025, Xerox is guiding for low single-digit revenue growth and a free cash flow of $350 million to $400 million, indicating a cautious but optimistic outlook.
How do these strategic moves position Xerox in the competitive landscape?
These initiatives are aimed at stabilizing revenue and improving margins. By expanding their digital services and IT solutions, Xerox is positioning itself to capture market share in a rapidly evolving industry. The focus on operational efficiency and strategic acquisitions should help them navigate competitive pressures.
Key takeaways. In summary, Xerox is in a period of transformation with a focus on strategic acquisitions and operational efficiencies. While the company missed EPS expectations this quarter, its long-term strategy shows promise. John, any final thoughts?
Xerox's reinvention strategy is ambitious, and while there are short-term challenges, the company's focus on growth and efficiency could pay off in the long run. Investors should keep an eye on how these strategic moves unfold in 2025.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Xerox's performance in the comments below.